light of the possibility of a third round of quantitative easing to be introduced into the US economy as a desperate attempt to stave off a double-dip recession. We can't get enough of this debate at this point. The state of the world and how you see it, we've already mapped out that the key event risk for the markets across the globe, Friday, Jackson Hole, and Ben Bernanke, what he may come up with.
Yeah, I think there's too much hype, and the man has got very few bullets, if anything, left. So
he's sitting with an empty locker.
Absolutely. I mean, he's given up, in a way, abdicated his responsibility constitutionally and legally by saying that for the next 2 years, no matter what happens, I'm not going to change interest rates. That's an abdication of a central banker's responsibility. Having done that, what else can he do? Well, government bonds are now downrated from AAA, AA. He can say, I'll buy as much as you want. He's just going to do more of what this economy does not need. Should he come and become more irresponsible, he will really go down history not better than his predecessor, who engineered this whole mess that we are in. So I'm terrified that he's going to do, under the pressure of market analysts, hype. Understand what the market analysts wanted, but that's not the advice that Bernanke.
So in your opinion, his legacy could be worse than the current helicopter Ben?
Absolutely. I mean, when we as students were teaching helicopter money, we thought this guy is mad. Who could have cooked up such a crazy idea? Little did we know that there will come somebody called Bernanke. It's just ridiculous.
Golan from Cape Town, you're on the line, so go ahead with your question for us this evening. Golan.
To ask the panel, if the world economy is growing at 4%, let's say, and the currency of trade is the dollar, mostly 70% of the reserve are dollars, wouldn't it be possible for the Americans to print just a little bit more? Put some more blood into the system, sort of, because it's already a trusted currency, as they call it.
Gentlemen, anyone want to venture an opinion on
I wasn't sure what the question was, to be fair.
Well, let's look perhaps at the US dollar and the sustainability of the US dollar as a reserve currency. Kevin, let's get Iraj to table his view and then you pick it up.
Look, on two grounds, US dollar cannot remain the reserve currency. First and foremost, the share of the US GDP out of the global GDP is now hovering around 20 and is heading for 16 to 18. Depending how fast the rest of the globe grows. Now, if that's the case, then on the technical ground, US dollar can no longer be the reserve currency. The second reason is that part and parcel of having a global reserve currency is that those who are in charge, they act responsibly. The minute that you abdicate your commitment to prudent conduct, then you're no longer fit to be the custodian of the global currency. It is not that different from under a set of conditions we were forced out of gold standard. We were forced out of what was called a dollar gold standard, 1972. 71, Nixon. Why? Because those who were in charge, they abdicated the responsibility. And we are exactly going to the next phase of it, we having to redefine a new basket of global currency to act as a reserve currency.
Kevin, everybody is nodding. Mark, we also got you nodding. Just hang on, let Kevin go and then we'll give it to you.
It's extremely sensible what Iraj is saying.
Well, you attacked our economist last week, so I'm so glad.
Let's just repeat that. He said common sense, it's extremely sensible what Iraj is saying.
Iraj, yes, supersede expectations of economists from Mark N.
Thank you.
Look, I'd agree with what Iraj is saying, that the dollar ultimately will lose that status. You know, whatever it was 15 years ago, the US was 32% of the world. Now, as Iraj is closer to 20, that continues on. So the US is losing its role in the world economically and I suspect also politically, and therefore that equates to losing power, and therefore ultimately you would expect that to translate into its currency. Right now what the world will struggle with is that there's no obvious successor. You would have maybe thought it was the euro, that's not clear, and you would now be looking at emerging markets as the next successor, but they haven't grown up enough to replace. So rightly or wrongly, there's nothing right now today to replace the role of the US in the global financial system. So despite all of these things which Iraj is talking about, it retains that role, that central role, and we all still focus on, hence we're talking about the US, we still focus on that, and we will continue until there's a viable alternative. And that viable alternative, I would suggest, comes from emerging markets.
Mark, do you see a viable alternative to the reserve currency?
Well, just on that point about emerging markets, in fact, de facto, they have chosen to be part of a dollar bloc. China is part of a big dollar bloc, as indeed is most of East Asia. So, in fact,
China is the largest holder of US treasuries.
And also, no, from a trade point of view too, and the way they're actually pitching things, effectively, China is America's backyard. So, with countries consciously, because in the world of the blind, the one-eyed man is king type thing, which is really where we are, I guess. I think the exorbitant privilege that we refer to of reserve currency status is probably going to be with us for quite some time to come, given the fact that there is no obvious option to the
So is the reality we're stuck with the US dollar even though it stinks?
For a while, but it's not going to last long. It's not as if just because euro has collapsed and emerging economies, by the way, don't have a culture of trusteeship of monetary management. So forget about China, India, or South Africa becoming the trustee anytime soon, simply because that culture doesn't exist. So we have two options. We either end up for another 30 years until these global rebalances come to an equilibrium with this terribly unacceptable currency, or 2 more, 3 more crises brings the players around the table and say, let's now redefine a basket of appropriately weighted currency. And we have a precedence for it, a very weak precedence, I must say. SDR of the IMF, special drawing rights, is a very weak, almost tentative precedence, but it's a very good start. I submit, therefore, that a couple of very nerve-wracking crises will force upon us what is the right move and will get us off the dollar.
Which is the bigger of the two evils at this point? The potential for the US to fall into a double-dip recession, or the Eurozone to see a government default out of the Eurozone, coming back to the Chinese newspaper this weekend referring to the Eurozone debt crisis as the Black Death?
Look, 6 of one, half a dozen of the other. You're talking about almost equiproportional size of the global economy being a total mess. So is 50% better than the other 50%? Pick and choose. From the global economy, technically, is 6 of one, half a dozen of the other. The only difference is one hopes, whereas in EU you need so many politicians, so many heads of states and so-called sovereign states to make some form of agreement. In the United States, at least is under the same Congress. And there's a bit of national pride and all that stuff, which is rapidly dissipating. But technically, 6 of one, half a dozen of that. Can
I just ask you, Raj, can you just put your academic hat on and chat about what are the consequences of the Fed fixing effectively interest rates for the next 2 years? What do you think that does to the US monetary system and potentially the global monetary system?
You see, technically, we have 2 variables that they have to act as counterbalance. You either fix the interest rates and the exchange rate and deficits have to move, or you fix the exchange rate and interest rates and deficit have to. Now, what have we done? We fixed the interest rate for the next 2 years. And at the same time, we're fixing exchange rate, meaning between Chinese and Americans, a whole lot of, as you pointed out, a lot of Asian dollar blocks. So what is left? Fiscal numbers. And fiscal numbers have got no headroom. And that's why for the first time, technically, in economic history, we've come to a situation that all 3 key variables, we have no headroom. Governments have run out of bullets, reserve bankers can't do anymore, and exchange rates come to a standstill.
That sounds very bleak.
It is bleak. No, it's a force majeure. It's a situation that politicians have really procrastinated and really almost refused intentionally to take the right decision. I mean, for 20 years, Europeans have been told, guys, get your structural adjustment in place. You cannot have a welfare state labor relations that you have, low growth that you have, and have a common currency. It just doesn't work.
Mark, how does this fit in with what you were saying earlier? Business as usual.
Well,
Making too much of the situation.
As I say, you can't. If you're in business, you can't get caught up with all this stuff. You've got to get out and generate some top line, hopefully at a reasonable margin. But back to the point I said earlier, that you're going to have to tough it out and tighten your belt. Companies have to do that, and states have to do it. Households have to do it, so why can't the state do it? What you're saying, Iraj, effectively, is that you can't prime the pump. And what that means is that the state has to take stock of where it is. And as I mentioned earlier, if that means toughing it out and getting the balance sheet in shape, much like companies are forced to do that and households, then that is a scenario we're going to have to live with, because the end result will ultimately be healthier, not only for the world economy, but for people in business.
Is that the reality?
That's a reality for business, but there is a political economy here that really makes the situation bleak. The American situation, give it to me, I'll fix it up technically. The rich have to pay another 30 to 40% more tax for the next 10 to 15 years. But now get the Tea Party voters to believe that, and get the left to cut back a lot of their expectations and welfare spend. Now, if you do that 10 years later, the American economy will be back in a robust shape. But none of the current politicians will be around. And that's the issue. There's another issue, which is a global one, which is relatively new. America has found itself and landed itself, actually, not found itself, through its own actions, has committed itself to expenditure that it cannot extricate itself from. The war against terror, billions. The war in Iraq, another 10 years left. Afghanistan, at least another 10 years, and then Pakistan will begin. Then, and so it goes. Those expenditures is not something that you can tighten your belt. You see, the notion of tightening your belt is coming from where there are choices that you can make. But unfortunately,
you've got to deal with the political economy as well.
That's the issue.
I think, just in summary, perhaps we can get your views around the table and come back to the viewer's question earlier, saying if we are facing the very bleak scenario in the developed world, what does that mean? And let's not just talk about emerging markets. What does it mean for South Africa? What do we in South Africa need to expect for the next 5-year period, given the state of the world? Kevin, you first, and then we'll go around the desk.
I think in general the world is going to face, certainly the developed world, lower average growth. I don't think the world's fully recognized that. Certainly the US and Europe have. So you're looking at very sluggish growth for a number of years, and in general world growth a lot lower. First point. The second point is you've got to look elsewhere for opportunities, for growth opportunities, and that elsewhere is, I think, going to still be dominated by emerging markets, potentially.
Are you going to tell me what it means for South Africa?
Potentially also for Africa. So what South Africa needs to do, I think, is to make sure that it starts to increasingly line itself to those spots around the world where you are getting better performance, and that you can outperform the sluggish activity in the US and Europe. And I think that is the BRIC countries. I think that's partly Africa, emerging markets in general.
Mark?
I've no doubt that in 10, 20 years' time the world will be richer. There'll be more middle-class people. I think that the Western world isn't doomed. I think the sort of political will either be forced on countries, or there'll be economic consequences to pay for that. And in fact, in companies I deal with, there's some very exciting things happening in Africa on our own doorstep here. And by and large, the world is going to be a much richer place. And particularly on the agricultural front, sort of commodity front, I think the best years lie ahead of us.
Iraj?
Yeah, I'm very much on the same wave. South Africa actually got a very good opportunity now. We got to reconstruct, expand our infrastructure. Capital has never been as cheap as it is now, and not so easily available. We were always branded as this African country full of risk and so on. Behold, who is risky now. Capital will come happily. Get corruption out of the way, get efficiency of spend in place, and put programs to expand our infrastructure, integrate into the sub-Saharan Africa. Stop talking about Africa, do Africa. Africa is now the second fastest growing region and will remain in the next 20 years. And the fact that, I think the point that Mark made, even with all the problems that the West has, 20 years from now, it will still be about 25% of the global economy, more or less the same as the so-called BRICS. So it's not as if they're going to disappear. We must just punch smartly now.